Hello? Hello? All right, what's going on, guys? All right, so what I'm doing is I'm going to talk about this potential move that could occur with dollar yen right now. Right, so in front of you, that we're looking at the 30-minute time frame. It's not the time frame I use to trade anyway, but it's just so you guys get an understanding of what we need to pay attention to when when we're looking for a move to develop in the market. All right, so let me just get rid of some things just to clear things up for you. All right, then. So, dollar yen. dollar yen has been doing something, right? And it's been stuck in this range for the last few sessions now. And that's the first signal to me that the market makers are effectively aiming to go short. All right. They've done very well to hold price from this big move up. They've done very well to hold it within this range here. Now, conventional traders would draw a box and they would trade out of this box. All right. So they say, okay, we can either trade from the low to the high and wait for it to break either side, or we'll take a couple of trend lines. Maybe if they draw this trend line here, maybe a trend line from down here, and that effectively would show a breakout to some traders. All right. But that's not what I'm looking for here. What I'm going to be talking about in this short video is just so you guys get an inkling as to how to really understand what's going on with price. All right. So we've got the market makers. Now, in the last few videos, I've shown you in the live trades that market makers like to build positions in certain key areas. So the key area that we're going to be talking about today is the 10500 mark. All right. Now, what I look for is when notable volume starts to appear above or below these key areas. So in this instance, we're talking about the 105 mark. Now, I can see here on this time frame, on the 30-minute, I'll go down to the 15-minute as well, and I'm seeing the same sort of story. Market makers are building positions above the 105 mark. All right, they're building their shorts. In other words, they're getting their shorts at the highest possible price. I mean, you've got to ask yourself, how is it possible, based on this massive move to the upside, that even after the first pullback, it didn't continue back up to the upside? You'd think that the momentum was there, all right? And that's what a lot of traders think, especially retail traders, all right? So when dollar yen made from this low down here all the way up to this high, traders that either caught this move or traders that missed the move were anticipating that a pullback was going to occur, which it did, and then they would start adding their positions. So they start getting their longs at probably about the pullback here, thinking that price is going to return back, and it did just that. So those traders who stepped in here, so we draw a mark. So retail traders that stepped in this area here, set their stops below down here in anticipation for price to continue up. And that's what's exactly just happened. Now, what the market makers then did is they sent price back again, making more retail traders believe that if they missed the move to the downside the first time, they could try and catch more value as it drops again. So this is exactly what it's done. It's come back down and touched the 105 mark. So a lot of retail traders have looked at that and said, okay, I missed the pullback from the first instance. I'll try and add here. And then here we have it. We have the next move to the upside, which is exactly what it did. It took out the previous high. Now, certain traders that missed this move from here and got in here are most likely holding their longs because they're anticipating that price is going to re-hit this high. However, that's not the case. All right. What we're looking at now is dollar yen is edging to the downside. Now, what I'm basing my information on is looking at these green candlesticks. Now, these green candlesticks are showing me that it's notable volume at the highs. Whenever we see notable volume at the highs, it means that something's going to change. And that's exactly what is flourishing right now. So you see these pumps to the upside. No real movement is happening. Now, look at the bottom down here. You can see how volume is rising as it hits to the highs. It's rising, but it's not actually making any ground. I mean, if we look from here, from the start of this volume trend to the upside, we're talking 28 pips on a 15-minute time frame. That's not really a lot of pips considering how many times prices exchanged contracts at the bottom. All right. So what we're now seeing is this. the 105 mark is still showing as the area where retail traders would look at it and say it's an area of support. So it tested here, and it's now in the area where it looks like it's going to try and retest the 105 mark. All right. Now the Asian session opens in an hour's time, well, about 50 minutes time. My understanding, based on what I can see in front of me, is that these green candles here, which are shorts created by the market makers, so they get their shorts at the highest possible price, and they're going to close them at a lower point in time. So at some point, we're going to see the market makers send price back down to this area here where these previous positions were built. Okay. Now you can see that it's just drifting nicely and slowly. Tomorrow is Friday, and Friday is a bit of a tricky day. I try and stay away from trading on a Friday because Friday is a profit-taking day for the market makers. Now we've been stuck in this range all week. Now all I'm seeing is price, or should I say notable volume, coming in, and it's all above the key 105 mark. All right. So what we really need to be looking at is, what should we be thinking when we're looking at price behaving like this? Now, the problem with most traders is they'll look at this and they'll say, all right, it's holding its high. It's holding in this range here. I'm going to place a buy because support is right down here, which is these big green candles down here. And I'm going to place my buys and hope that it goes in my favor. I mean, people even go into higher time frames and see where price is there. All right. So it looks like we're going to retest. It looks like a higher low is being formed here. But that's not what's going to be happening. I mean, from my experience, from understanding this methodology that I use, there's a very high chance that these green candles here are going to get filled again. All right. And whilst they're getting filled, we're going to be testing the monthly support, which is here, the daily support, and the monthly S2 support there, and the DS2 support there as well. So these are all areas that the market makers are going to be just taking the liquidity from the retail traders who believe that this pullback here was an opportunity to add to this previous trend, and then this opportunity here as well. You've got to look at it like this, guys. When you're trading and you see price behave and get stuck in this range here, some would call it a high flag, all right, where you're going to label the high and where the last low was and see what side it breaks. That's good, and it does work. But to really understand trading, you have to understand what's happening behind the price. What's the actual motive for the market makers to keep price in this area, right? And most traders that talk about patterns and what have you don't really talk about the meta game of trading. And that's where you're going to make the clear distinction from being a trader that doesn't win often and always loses to a trader that's starting to win and keeping their losses to a minimum because you're understanding the market structure behind what's going on. All right. So I'll do an update on what happens after once this trade happens, but we're looking at the news announcements for tomorrow. There's nothing really coming out. All right. If I look down here, we've got the federal budget balance. That's a weak announcement. The PPI month on month. That's not really interesting. And the consumer sentiment. It's not really interesting either. Well, it does have a medium effect in the market. Okay. But the real move is going to happen when it starts to take out these next green candles. Now, where price is at right now, we zoom in. If you look closely here, you can see that price has now crossed the 50-day and we've got the 200-day moving average in sight. All right. Now, this is what will happen. Well, this is what we bet on. This is when I say we pay to play. All right. This is what my job as a trader is. I'm assuming that during the Asian session, okay, it's most likely that price is going to keep staying in this range. All right. It might make a move to the upside to catch the other retail traders who think that price is still going to continue because of this big move up. You've got to remember as well, there's now this issue, but the great news about the vaccine that's, being passed through. there's potentially the end to the coronavirus, the sentiment, everyone's getting excited about it. We're going to hopefully go back to normal. All right. But what you need to ask yourself is if during the most volatile sessions and the most liquid sessions, price hasn't gone anywhere from this range, it's most likely that it's going to continue in the Hong Kong session. All right. So we could see price pull back a little bit, retest the 105, and then maybe attempt to make the high. It might even try and take the daily open again, because usually what price does is it likes to visit the daily open if the daily open is within a reasonable range. If the daily open is like 50, 60 pips away, it's unlikely that it's going to visit that area anytime soon. All right. So what I'm going to be looking for is I'm going to be looking for a test of the 105 mark here. And once it tests the 105, it will effectively retrace and it will stay in this area. All right. I'm talking in a range of about, 25 to 30 pip range. It's going to stay in this range over the course of tonight. But then once we start going into the Frankfurt Open and the London Open, we're going to start seeing the action take place. Now, it all depends. It depends if the traders in London, all right, want to start getting the orders cleaned here, or should I say the market makers, do they want to wait for the London Open, or are they going to wait for the New York Open where the most amount of money is exchanging hands during that crossover period? Now, my experience tells me that that is going to be the plausible result, where once the New York session opens, or the crossover, then it's most likely that we could be seeing a visitation to these green candles here, because these green candles are the market makers pushing price up, which is getting their shorts built at a higher price in anticipation to close them at a lower price later on. Now, we will never know when the market makers do that, but the thing is, the market makers leave footprints, and the footprints are these notable candles here, these red candles, and then the green candles. Look at the actual image itself. Look at the chart. You can see that the green candles are pushing up to the upside, which is the market makers building shorts at the highest possible price. All right. And then you've got the red candles, which effectively is going to be the introduction to the markdown phase. All right. Look at the volume. Look at this green candle here. Massive volume at the bottom, right? But the candle couldn't close at its high range. That right there, that's a massive clue. That's climatic behavior. If the market makers had an interest in sending price higher, this candle would have continued to the upside. Especially, look at these candles here. Look, same story there. Massive volume at the bottom. The candle didn't close at its upper range. All right. And that right there is those are the little clues that you need to look for. And then when you need to ask yourself, okay, what are the market makers trying to do? Are they trying to make traders believe that price is going to continue to the upside and it wants them to start entering more positions, or should we say averaging down? Because some traders could be in a losing position because they wanted to try and grab the move that happened here. All right. Are they trying to make all retail traders believe that we're going to still continue to the upside? Now, the key thing to pay attention to as well is if the 105 gets tested and it shows support and then it starts to return back up, then that would effectively be the market makers, maybe their last attempt before they start sending price down. Now, I'm not predicting where the price is going to go. What I'm saying is, based on what I'm seeing in front of me and the way price action is being delivered, is the market makers have intentions of going lower. Now, the reason being is notable volume above the key area of the 105 mark, which is this blue line here. All right. High volumes at the highs, but not gaining any ground. If you look at this here, look at these candlesticks here, these big green candlesticks. When you see big volume coming in, you expect price to go in that direction also. All right. But you're seeing half the volume occurring here, this candle, this volume bar down here, up here, and it's not going anywhere. As you get to use this system, you'll start to understand and see these things, and you'll be saying to yourself, right, okay, I'm going to put my money down on a short, and if I'm wrong, I'll only lose X amount. So if I were to enter short now in this trade, I'd probably make the daily open as my stop loss. That's what I would make it as. I'd make the daily open my stop. I'd enter short here and see what plays out, because that's all I can do, you know. And part of the meta game of trading is also that you have to be aware of what's going on in the minds of the dumb money. Our job is to follow the smart money, all right? And that's hard enough. But if we start paying attention to what the masses are doing, we're then going to get an inkling as to what the market makers are going to be doing, which are the smart money. All right, it's the best way to put it to you guys. If you want to understand how the market works, follow what the retail traders would likely be doing, and then make a judgment on what you think the market makers would want the retail traders to do. You have to remember, the market makers need the liquidity from the retail traders. So whenever you got traders like, for example, let's take this. Let's draw a Fibonacci. We'll take the low, take the high. All right. You've got a Fibonacci here, the 23.6 retracement. Now, if you look here, when price made this high here, pulled back. Actually, no. Let's draw it here, yeah. So when price made the high, pulled back, most traders would have entered at the 38.2 mark, all right, or somewhere near it, in anticipation for a continuation to the upside to occur. So the market makers knew that when they finished their moves up here, they knew that there'd be traders coming in into this area. Because you can imagine thousands and thousands and thousands of traders are drawing Fibonacci's, all right? So the market makers use the Fibonacci tools that are available to the retail traders, and then they send price in that direction to entice retail traders to open positions with the belief that price is still going to continue to the upside. All right. Now, if this was a conventional trading channel where we'd be talking exclusively about price action, all right, everything that I've just said wouldn't have been included, because all we'd be talking about is pin bar, you know, lower high, high low. These are things that, you know, you should know as a trader. And if you're a newbie, you're at an advantage, because if you're not really paying attention to candlesticks and lower highs and high lows, and you're focusing on the meta game of what's actually happening behind price as it's being printed, all right, you're effectively one step ahead. Trading is a mental game, all right? And not enough people talk about, or should I say, not enough people are serious enough about the mental game of trading, all right? You want to understand how to trade, you want to understand the markets, understand how people think when they trade. Forget about what they look at, forget about what tools they use. Understand how people think when they see price enter an area. For example, the traders that miss this move to the upside would want to get a piece of the action, so they would enter on the pullback. The only reason why they would wait for the pullback is because price had been extended so far away from the mean, which is this this blue line here. All right? The mean reversion, it's a sound theory. Everything always deviates back to the mean. And that's exactly what's happened here. It pulled back to the mean. Now the market makers and the retail traders quickly stepped in the belief that they would get a cheaper price for their positions in anticipation for it to ride back up to the upside. Whilst traders are entering here and here, all right, they're building stops down here. Now, a lot of swing traders would have, if they've got a risk reward of 2-to-1, they'll probably take 25 pips here, 20, 30 pips stop loss, another 20, 30 pips stop loss. All right. Now, imagine these stop losses being filled by thousands and thousands of traders. Now, when the market makers look at the screens, they're going to look at this and be like, okay, we can see dead money in this area here. Well, believe it or not, guys, the dead money that this area is filled with happens to be the same area where the market makers previously opened their shorts. Okay? So you can't say to me by accident that the market makers send price back into this area because it's just the way the market is and the market is random. This market is not random. All right? The only thing random about it is the fact that we won't know where the market makers will move price next. It's just a matter of when. We will never know where. It's just a matter of when. And once you come to understand this ideology about trading, you'll be one step ahead of every single retail trader out there. Now, there are guys that understand this, and then there are guys that have price action nailed down to a T. However, I'd say most of them have the understanding of the psychology behind what other traders are doing in these certain areas here. All right. So yeah, right now we're looking at price. We can see it's just stalling right here. Look at how slow price is. All right. It's not doing anything and it's done nothing all day. All right, you got a couple of moves to the upside and what have you. I mean, look at all these wicks, inconsistencies that are occurring. My understanding is we're going to see this price, this area here. All right. And yeah, I'm not saying that we're going to see from the tip of this green candle all the way down to this tip of the green candle. It depends on what the market makers feel like doing. All right. But we're probably looking at this area here, and you can see price is already on its way to it. All right. So I hope that's been a bit of value for you, whoever's watching. Hope you can hear me clearly as well. But this is what I'm going to be doing. I'm going to be doing these sort of live videos of the market and talking about moves that could potentially happen. All right. I'm not giving you advice to place a trade. All right. I'm just giving you my opinion on what I think price is doing right now. Okay. So I wish everyone all the best and get ready for the next video where we go into more detail about the meta game of trading.